I made my first million in my 40s, my first billion in my 70s. You want to know the difference? The real secret that separates those 2 points in a man's life? It's not what you think. It's not some brilliant insight. It's not a once-in-a-lifetime stock pick. I just stopped doing stupid things. That's it. That's the secret. Everyone, and I mean everyone, is searching for the magic bullet, the secret formula, the hot tip from a guy who knows a guy. They want to know what to do. When to buy, when to sell. It's a fool's errand. There is no secret. There's only a list. A short list of catastrophic, idiotic, wealth-destroying mistakes. That's all that separates the rich from the rest. It's not about being a genius. It's about consistently, methodically, not being an idiot. If you just avoid the big mistakes, the game is over. You win. I've sat in rooms with men who have IQs you couldn't measure, geniuses, and I've watched them obliterate themselves financially. I've seen them lose fortunes, not just money, but time. Decades of their one and only life wiped out. Why? Because a high IQ is no defense against basic fundamental stupidity. Today, I'm going to give you the list. The 5 fundamental mistakes that will cost you everything if you let them. And make no mistake, if you're making just 2 of these right now, you're already 10 years behind schedule. So listen closely. Mistake number 1, you are learning from your own mistakes. You think it's noble. You've been told experience is the best teacher. That's the dumbest thing I've ever heard. Completely and utterly wrong. It's like learning about poisonous mushrooms by eating every one you find. You only get to be wrong once. This makes me insane. I'm not smart enough to make all the mistakes myself. Warren isn't either. There isn't enough time in one life to learn everything the hard way, so I do something else. I read. Voraciously. I study the mistakes of others. I collect them. I want to know every single way a man can go broke, every single way a business can fail. I want to know how the geniuses at long-term capital management, with their Nobel Prizes, managed to nearly collapse the global financial system. They were leveraged 100 to 1. They thought their models were perfect. They were wrong. Hubris. I want to know how people in the 1700s lost their life savings on the South Sea bubble, because it's the exact same psychology that drove the dot-com bust in 2000. People don't change. Greed and fear are constants. History doesn't repeat, but human nature does. And what are you doing? You spend 2 weeks researching a new television, reading reviews, comparing specs. But you'll throw $10,000, your hard-earned money, into some company you heard about at a barbecue because your brother-in-law had a good feeling about it. You're learning by setting your own money on fire. The rule is simple. Before you invest a single dollar, read about 3 spectacular failures in that exact industry. Your homework is to go read the story of Enron. Tonight. Don't just skim it. Understand the arrogance, the complexity that hid nothing, the auditors who were complicit. Internalize that failure. Make it your own without paying the price. Mistake number 2. You are addicted to complexity. You think that if something is complicated, it must be smart. You read white papers you don't understand. You listen to analysts use jargon designed to confuse you. You think complex problems require complex solutions. This is an academic disease, and it has infected all of you. It's wrong. Utterly, completely wrong. Warren and I have a very simple rule. We call it the circle of competence. If we can't explain an idea to a reasonably intelligent 6th grader in about 60 seconds, we don't do it. Period. We just throw it in the too hard pile. You know what's in our too hard pile. Almost everything. And you know what? It hasn't hurt us one bit. The 2008 financial crisis was caused by complexity. CDOs, synthetic CDOs, credit default swaps, instruments so complex, the people selling them didn't even understand them. They were just layers and layers of bets, built on a foundation of sand. It was a time bomb wrapped in an enigma. And it blew up. Enron. Same thing. They created a business so convoluted, with so many offshore entities and special purpose vehicles, that no one could figure out how they actually made money. The answer was simple. They didn't. It was a fraud hidden by a fog of complexity. And you're doing the same thing on a smaller scale. You're trying to understand quantitative easing's effect on the forward PE ratios of non-profitable tech. Just stop it. Can you explain how Coca-Cola makes money? Yes. They sell sugar water for more than it costs to make it. Billions of times a day. Can you explain how your local utility company makes money? Yes. They have a monopoly, and everyone needs to turn the lights on. It's simple, it's durable, it's understandable. Here's your test, the rule you must live by. Can you, right now, explain how this business generates cash, what its primary risks are, and what its long-term competitive advantage is? In under 60 seconds. If the answer is no, you have no business owning it. Your homework. Look at your portfolio. Pick one holding. If you can't pass that 60-second test, sell it. I'm not kidding. Sell it tomorrow. It's a landmine you don't even know you're standing on. Mistake number 3, you are ignoring incentives. This might be the most important and the most overlooked mistake of all. You're listening to people without first understanding what motivates them. It's like asking your barber if you need a haircut. The answer is always yes. I have a saying I live by. Show me the incentive, and I will show you the outcome. This single idea explains 95% of human behavior. It is the most powerful tool in my mental toolbox. If you don't understand the power of incentives, you are walking through life with a blindfold on. The Wells Fargo scandal, where employees opened millions of fake accounts. Why? Were they all evil? No. They had an incentive structure that was insane. They were told to open a huge number of new accounts or be fired. So, they opened fake accounts. The outcome was baked into the incentive. The dot-com bubble. Why did every Wall Street analyst have a strong buy rating on every piece of garbage tech company? Because their investment banking divisions made fortunes taking those companies public. The incentive wasn't to give you good advice. It was to fuel the IPO machine. And you're taking stock tips from a financial advisor who gets a 2% commission for selling you a specific mutual fund. Of course, he's going to tell you it's a great fund. His mortgage depends on it. You're watching a kid on social media tell you to buy a cryptocurrency without realizing he already owns a massive bag of it and needs you to buy it so he can dump it on you for a profit. You are a pawn in someone else's game. Here's the rule. The whose pocket. Test. Before you take anyone's advice on anything, ask yourself, how does this person get paid? What happens to their bank account if I do what they say? If you can't answer that, their advice is worthless. Your homework for tonight. Make a list of the last 3 pieces of financial advice you received from anyone. Next to each one, write down the incentive of the person who gave it to you. The results will disturb you. Mistake number 4. You are in a god-awful hurry. You want it all, and you want it now. You think investing is a fast-paced game of buying and selling. You think wealth is built in weeks, not decades. This isn't a race, it's a marathon. And your frantic sprinting is going to give you a heart attack at mile 3 while the patient tortoise plods past your corpse on his way to the finish line. The big money is not in the buying or the selling, but in the waiting. The waiting. The power of compound interest is the eighth wonder of the world, but it needs one crucial ingredient: time. A long, long time. And you are constantly interrupting it. You buy a good company, and a month later, it's down 5%, so you panic and sell. You hear about a new, exciting industry, so you sell a wonderful business you've owned for years to chase the shiny new object. This is a losing game. Look at the data on day traders. The vast, overwhelming majority lose money. They get eaten alive by transaction costs and emotional decisions. Look at the people who sold everything in a panic in March of 2020. They locked in catastrophic losses right before one of the fastest market recoveries in history. Their impatience cost them a generation of wealth. And what are you doing? You check your portfolio 10 times a day. You get a little dopamine hit from the green numbers and a jolt of cortisol from the red ones. You're not an investor. You're a gambler playing a slot machine with your family's future. You're confusing activity with achievement. The new rule is the 5-year test. If you are not willing to own a stock for 5 years, do not even think about owning it for 5 minutes. You need to think of a stock not as a ticker symbol on a screen, but as a fractional ownership of a real business. Would you buy a small piece of a local restaurant and then try to sell it the next day because it was raining? No. So why do you do it with your stocks? Your homework: delete the stock market app from your phone. Right now, for 1 month, just one. I guarantee you will make better, clearer decisions. You need to let your assets compound in peace. And the final mistake number 5, you are only looking for information that confirms what you already believe. This is called confirmation bias, and it is intellectual suicide. It is the most comfortable, most pleasant way to go broke I know of. I never, ever allow myself to have an opinion on anything that I don't know the other side's argument better than they do. I am not trying to confirm my beliefs. I am actively trying to destroy them. If I have an idea, I seek out the smartest people I can find who hold the exact opposite view. I want them to tear my idea to shreds, because if they can't, then maybe I'm onto something. But if they can, they've just saved me from a terrible mistake. The fall of Kodak is a perfect example. They invented the digital camera. But they were a film company. Their entire identity, their profits, their incentives were all tied to film, so they ignored the evidence. They looked for every reason why digital was a fad, why it wouldn't work. They lived in an echo chamber of their own making until they went bankrupt. Blockbuster did the same thing with Netflix. They laughed at them. They couldn't imagine a world without physical stores because it was all they knew. You do this every day. You buy a stock, and then you only read articles and watch videos that say it's going to the moon. You ignore the bad earnings report. You dismiss the new competitor. You explain away the changing regulations. You are plugging your ears and humming, hoping reality goes away. It won't. The rule is this: the steel man rule. Before you make any significant financial decision, you must be able to write down on paper the 3 strongest arguments against your decision. Not weak, straw man arguments. The strongest, most intelligent arguments the other side would make. If you can't do this, you haven't done your homework. Your final piece of homework: find the smartest person you know who holds the exact opposite view of your single biggest investment. Take them to lunch, and for 1 hour, just listen. Don't argue. Don't defend. Just listen. So there you have it, the 5-part list of how not to be an idiot. Stop learning the hard way. Demand simplicity. Understand incentives. Be patient. and actively seek to destroy your own most cherished ideas. You won't get rich next year doing this. It's too slow. It's too boring. Your friends will be telling you about the fortunes they made on some speculative nonsense. You'll feel like you're missing out. But in 30 years, 40 years, you will be in a position that 99% of your peers can only dream of. You'll have won the game, not by being brilliant, but by being rational. Most people clicked off this video 10 minutes ago. They're already watching top 3 crypto to 100x this month. Their impatience is a disease. If you're still here, it means you're serious. It means you're one of the few who understands that wealth isn't a lottery ticket. It's a construction project. There's no hype here, no predictions, no secret formulas, just the timeless, brutal principles of cause and effect that govern the world of money. If that's what you're looking for, you know what to do. I'm done. Go read a book and stop doing stupid things.